This is another confronting set of numbers from another Australian lender. This was pretty much expected given everything else that we've heard.
Yes, I mean, I think, the interesting thing about today is there aren't actually really any huge surprises in the numbers. Westpac had flagged, really high bad loan loss provisions, similarly to many other global banks. It had warned it was taking charges against a potential settlement of the outstanding money laundering allegations against it. So really a 70% drop in profits in those contexts is roughly what things were expecting.
What did we see in terms of loan provisions?
So in total, the bank has now said it's taking 5.8 billion in provision for loan losses, which is obviously a huge increase from previously. Of those, 1.6 billion is predominantly related to the impacts of COVID-19 as an indication of just how quickly the picture has shifted there. The bank also says it's seeing some early signs of stress among some of its mortgage holders. As you remember, this is the country's second biggest bank, and it has an overweight exposure to particularly investor loans in its mortgage book. However, so far it's not reporting any major spike in delinquencies or anything like that. As the other banks have said, in terms of consumer stress, there's a huge amount of support going into the economy right now. The major banks are offering, 6-month payment holidays and stuff. So, we're probably, the real problems in the consumers are likely to be 5 to 6 months down the line when those packages start to run out, assuming they're not renewed.
Are we starting to see the starts of some restructuring in terms of moving these, unscalable assets around, or will we see asset sales in the near future?
Yes. So Peter King, who was appointed permanent CEO only about a month ago now, what he's done is he's created this new division. This new division is essentially having a little bit of a grab bag of businesses that Westpac no longer thinks they've got scale at. These include things like auto finance and some of their wealth platforms. Now, Westpac was always slightly slower than some of the other big Australian banks to start selling some of these assets. It's a story we've been talking about with ANZ, for example, for a number of years now. So what they've done, and they've said very, very clearly, is these are now going into this division, and they are going to do a strategic review, which will also include potential sales of these assets. Again, there's a similar strategy emerging across all of the big Australian banks right now, and that's to be simpler. Getting, the days of dashing to be all things to all people and run multiple businesses are well and truly gone. And the banks are really trying to concentrate on bread and butter banking, primarily located in Australia and New Zealand.
Emily, just quickly, this was the first set of results since Peter King became CEO about a month ago. What are we expecting from him in terms of strategy going forward?
Well, I mean, look, you normally have a new CEO and you normally devote, pages and pages of ink to strategy. But I think really right now the strategy for every bank executive is to get through COVID-19. Things like simplification, expense control, sorting out legacy problems, They're all going to go on. But the main thing is for the bank to get through this.